Level 1. The illusion of control. You download a sleek, highly rated trading app. You sign up in 3 minutes and immediately receive a free stock just for linking your bank account. You deposit $1,000. You search for a tech company you like, swipe up, and instantly execute a trade. Digital confetti explodes across your screen. You smile. You feel powerful. You are now an investor, a partial owner of a multi-billion-dollar corporation. You feel like you are finally taking control of your financial destiny. But you didn't enter the financial markets. You walked into a digital casino disguised as a brokerage. Goldyolk designed the interface to mimic a slot machine. The bright colors, the instant gratification, the frictionless swiping, it is all meticulously engineered to trigger dopamine, not rational calculation. He gives you a free $5 stock because he knows the illusion of early success is the cheapest way to buy your lifelong participation. Goldyolk's money rule. The gamification of finance is designed to replace your logic with addiction. When trading feels like a video game, you stop treating your money like survival capital and start treating it like arcade tokens. Level 2. The social proof trap. You are scrolling through Twitter or Reddit. Everyone is talking about a new meme stock. A coworker brags about doubling his money in 2 days. People are posting rocket ship emojis and screenshots of massive gains. The fear of missing out, FOMO, grips your stomach like a physical cramp. You don't want to be the only one left behind while everyone else gets rich. You buy in at $80 a share. You feel safe because you are part of a massive, unstoppable movement. 3 days later, the stock plummets to $30. You were not part of a movement. You were the exit liquidity. Goldyolk's algorithms detect social media sentiment and front-run the hype. His institutions bought the stock at $10 weeks ago. They subtly pumped the narrative, letting the retail herd whip themselves into a frenzy. When the price hit $80, Goldyolk happily sold his millions of shares directly to you. Goldyolk's money rule. Herd mentality is engineered exit liquidity. When a stock tip reaches the mainstream retail investor, the trade is already over. You aren't buying an opportunity. You are buying the bag smart money is desperately leaving behind. Level 3. The sunk cost paralysis. That stock you bought at $80 is now sitting at $40. You are down 50%. You stare at the glowing red numbers on your screen, but your finger refuses to tap sell. You tell yourself, it's only a paper loss. It's not a real loss until I actually sell. You suddenly start reading the company's financial reports, trying to find good news. You convince yourself that you are no longer a short-term trader. You are now a long-term value investor. You aren't a long-term investor. You are a hostage to your own ego. Goldyolk knows that human psychology is deeply flawed. You feel the pain of a financial loss twice as intensely as the joy of a gain. He relies on your absolute refusal to admit you were wrong. While your capital sits paralyzed in a dying, dead-weight asset, Goldyolk's capital is agile, rotating into the next profitable sector. Goldyolk's money rule. A long-term investment is usually just a short-term trade gone horribly wrong. Ego is the most expensive item on a balance sheet. The market does not care what price you bought it at. It only cares what it is worth today. Level 4. The false predictability. You decide to get smart. You discover technical analysis. You learn about moving averages, MACD, and head and shoulders patterns. You spend hours drawing colorful diagonal lines across your screen. You wait for a stock to hit a specific historical support level, and when it touches that exact line, you confidently buy heavily. You feel like you have cracked the matrix. You finally have a mathematical system. You are practicing financial astrology. Goldyolk supercomputers execute 10,000 trades in the millisecond it takes your brain to process a visual chart. They don't look at your amateur trend lines, they look directly at the order book. They know exactly where thousands of retail investors place their stop-loss limits. Goldyolk deliberately pushes the price down to hit your exact support line, triggers your automatic sale, scoops up your shares at a massive discount, and instantly drives the price back up. Goldyolk's money rule. Technical analysis gives retail investors the illusion of control in a chaotic system. You are drawing shapes in the sand, unaware that institutional algorithms are the ocean tide designed to wash them away. Level 5. The Value Mirage. A highly popular company's stock crashes from $250 to $100. You immediately pounce. It's an absolute bargain, you think. It has to go back to $250 eventually. As the stock drops further to $60, you buy more. I'm averaging down, you declare. You feel like a contrarian genius, picking up dollar bills for 50 cents while everyone else panics. You are anchored to a ghost. That $250 price tag was never the true value. It was an anomaly caused by temporary euphoria. Goldyolk loves your anchoring bias. He knows your brain assumes a stock's all-time high is its rightful destiny. You aren't catching a bargain, you are catching a falling knife. Your persistent buying is exactly what provides the liquidity for smart money to quietly and safely exit a fundamentally broken company. Goldyolk's money rule. Price anchoring blinds you to fundamental decay. A stock that is down 80% is simply a stock that was down 60% and then lost half of its value again. A cheap stock can always go to zero. Level 6. The free execution. You execute 30 trades in a single week. You don't mind the frequency because your app aggressively advertises zero commission fees. You feel completely liberated. You think you are finally trading on an even playing field with Wall Street. Free trading feels like the ultimate democratization of finance. If the product is free, your money is the product. Goldyolk's brokerage doesn't charge you a fee because they make billions selling your order flow. Before your buy order even reaches the public exchange, a high-frequency trading firm intercepts it, buys the stock a fraction of a penny cheaper, and immediately sells it to you at your price. You are being invisibly skimmed on every single transaction. Goldyolk's money rule. In finance, nothing is democratized without a hidden toll booth. Zero commission trading removes the friction of your spending, encouraging overtrading so institutional algorithms can legally front-run your capital. Level 7. The options meat grinder. A reliable 8% annual return feels agonizingly slow. You want to be rich this year. You discover options trading. You buy out-of-the-money call options. For just $500, you can control 100 shares of an explosive stock. If it jumps, you make 0%. Your heart races. You dream of handing in your resignation letter on Friday. You finally have your hands on the ultimate weapon, extreme leverage. You aren't buying a financial instrument, you are buying a lottery ticket with a decaying expiration date. Goldyolk is the one writing and selling you that ticket. He calculates the mathematical probability of the stock hitting your target price, and he knows it is less than 3%. He gladly collects your $500 premium, knowing that time decay will silently burn your option's value to absolutely zero by Friday afternoon. Goldyolk's money rule. Leverage without inside information is just accelerated suicide. The derivatives market was built by the wealthy to extract cash premiums from the impatience and greed of the working class. You buy a dream, they collect the rent. Level 8. The media distribution. You turn on the financial news network. A famous analyst in a sharp suit is pounding the table, screaming that a specific sector is a strong buy. Articles flood your newsfeed about the next big thing in AI or green energy. You feel informed. You have the inside scoop straight from the experts. You confidently deploy a massive chunk of your savings into the hyped sector. By the time the news reaches your television screen, the trade is already dead. Goldyolk owns the media networks. Financial news is not an advisory service, it is an inventory distribution mechanism. When Wall Street institutions need to unload 10 million shares of an overvalued, bloated asset, They need millions of retail buyers to absorb the shock. They manufacture the hype, turning reporters into salesmen so you will gladly buy exactly what they are desperately dumping. Goldyolk's money rule. If you are reading about a boom in the news, you are the liquidity needed for the exit. Institutional capital dictates the news cycle. They buy the silence and they sell the noise. Level 9. The panic capitulation. A massive, unexpected market correction hits. The entire market bleeds. Your portfolio is down 45%. The news cycle flips from euphoria to apocalyptic doom. You haven't slept properly in 3 weeks. The physical and psychological agony of watching your life savings evaporate is unbearable. Finally, you break. You hit sell all, just to make the emotional pain stop. You feel a hollow, tragic relief. You just completed the perfect wealth transfer. Goldyolk's entire market structure is mathematically calibrated to find your exact psychological breaking point. He engineers extreme volatility to squeeze the retail class until they capitulate. The very day you surrender and sell your assets at a devastating loss is the exact day Goldyolk swoops in, buying those identical assets at fire sale prices right before the inevitable massive rebound. Goldyolk's money rule. Emotional breaking points are not accidents. They are engineered harvest seasons. The stock market is a machine designed to transfer assets from those who cannot endure pain to those who mathematically weaponize it. Level 10. The ultimate harvest. You step away from the market, bruised, cynical, and broke. You tell your friends that the stock market is just a rigged casino, a game of pure luck that you happen to lose. You blame the economy, greedy politicians, the Federal Reserve, or just bad timing. You vow never to invest in stocks again. It wasn't luck, and it wasn't bad timing. You played your designated role perfectly. The stock market is not a magical machine that prints wealth out of thin air for the working class. It is a highly efficient ecosystem designed to harvest human psychology. Goldyolk built the arena, funded the algorithms, and invited you in, absolutely confident that your primal instincts, fear, greed, ego, and impatience would naturally execute your own financial ruin. Goldyolk's ultimate rule. Retail investors are not players in the game. They are the fuel for the engine. The market is not a wealth creation machine for you. It is a wealth transfer machine for them. Your psychology is their greatest asset. Welcome to the game. Learn the rules or be played.